In this video, we're going to talk about insurance costs. First example is going to talk about car insurance, and the second one is going to talk about health insurance. These examples don't consider all the factors, just like the other problems. So for instance, in this first problem here, if you're talking about not carrying car insurance, that's usually illegal in most states, and you would have to pay a fine of some sort. On top of that, we're not including that. So many insurance companies carry a deductible provision that states how much of a claim you must pay out of pocket before the insurance company pays their remaining expenses. So suppose you have a car insurance policy with a $800 deductible provision per claim for collisions. This means you're carrying collision insurance, right? During a 2-year period, you file claims for $650, which is below your deductible. So you'd be paying all of that, and $1,200, which is above your deductible. So you'd be paying the first $800. So with your insurance policy, you would be paying $1,450 on those claims, plus you'd be paying your premium for the policy for 2 years here, $450 a year. So you'd be paying $2,350. This is with the policy, right? So without the policy, you'd have to cover everything out of pocket yourself for the accidents. So you're going to have $650 plus $1,200 is $1,850. So it appears, just with the numbers that you're given here, that it would be cheaper to not carry the collision policy, to only carry liability. Again, you may not have that option. For instance, if you're leasing a car, you may have to carry collision insurance on it or something like that. So, or if you have a loan against your car, they may require that you carry full coverage on your car or something like that. So not all the details are here, but assuming that you have the choice here and that the claims that you have here are small, you would pay less paying them out of pocket in this situation than letting the insurance cover it and having to pay the insurance company your premiums. This premium is where the money is coming from that the insurance company is able to use to cover your expenses. So, all right, let's go ahead and look at another example with healthcare costs. So assume that you have a health insurance plan with the following provisions: that your office visit, you pay a copay of $25. Emergency room has a $200 deductible, meaning you pay the first $200. Surgical operations have a $1,200 deductible, meaning you pay the first $1,200, and you pay a monthly premium of $700 for your insurance. So let's add up these costs first without insurance to see what you would be paying for the year here. So this is 740 plus 100 plus 8,200 for that surgery, plus 120 plus $1,120 for that ER visit, is a total of $10,280. This is without insurance. Now let's figure out what you would pay with insurance. So this emergency room visit here is going to be $200 for you. This office visit is going to be $25 for you. This surgery is going to be $1,200 for you. This office visit is going to be $25 for you, and this ER visit is going to be another $200 for you. So that's going to be 200 plus 25 plus 1,200 plus 25 plus 200 is $1,650 right now. But wait, there's more, because you have to pay your premiums during this time, and you're paying a premium of $700 a month. So 700 times 12 for the year is $8,400 that you are paying in premiums. So we're going to add those together. And you get 1,050. And you see that you save a couple $100 here having the insurance. And the reason for that is because you had this big expense, this surgery right here, right? If it weren't for that, probably it would be less likely that you would have saved money this way, but insurance really helps you out when you have these big expenses like this. So otherwise, you're paying the money to the insurance company, whether you use the benefits or not. That's the way insurance works. Is it's a policy that you're always paying the money into it. You may not always be using that money, but they're making the gamble, if you want to say that they expect you to spend less in health insurance costs than you're paying to them in premiums, and that they're going to make money in the end. So for you, though, it's going to probably be worth it to not have to pay this big out-of-pocket expense right here when that unexpected expense comes. Include that one and this ER visit, that surgery visit, and that ER visit right there are all really unexpected things, big expenses that it's good to have insurance for. All right. There you go. Hopefully some of these word problems here have helped you figure out how you can work things out on paper and take into account these things that are here, but there's also lots of hidden factors that they don't talk about in the word problems. Your book may tell you some more, or notes may give you some advice about other things to consider, like inflation, the time value of money, and depreciation of assets, and all those kinds of things that you might want to consider when making these types of decisions. All right. Have a good day.